we need to talk about something serious going on right now. People are doing some crazy things that will eventually cause them to go bankrupt or worse. Maybe you are doing some of them too. What are they and what should you do about it? I'll answer those questions for you right now. Welcome back, everyone. In this video, we will talk about the 4 crazy things people are doing right now and how to avoid each, in my opinion. And we'll cover the biggest reason people are doing these things. And if you like making money and are looking to learn and invest alongside a guy with a crooked head and no girlfriend at all, but has a super sweet community of new cool kids who like to shout out my channel to famous YouTubers, go ahead and subscribe, hit that little notifications bell, and while you're down there, go and hit the like button as well. Remember, this is for entertainment purposes only. Do not listen to me. Now, I will warn you guys up front right now. This is going to make a few people angry again because I will be calling them out essentially. Not directly, but what they are doing. I refuse to tell you that these 4 things are anything but poor investing actions. If you are looking for unicorns, ice cream, and participation trophies, then I may not be your guy. I'm sorry. So those of you that appreciate that, smash that like button right now so we can offset the negativity that is sure to come from all the chat room millionaire experts out there. The first crazy thing people are doing right now, treating the market like the lottery or a get-rich-quick scheme. Answer this question before we even get started. What rate of return do you expect from your stocks this year? Take your time and think about it now. Do you expect to 3x, maybe 5x, maybe even 10x your money? All right. Let's just be conservative and keep the risk down, right? We don't want to be too risky. So we will say you just expect to, 2x your money over the next year. If you expect this, you would be dead wrong and are treating the market like the lottery or a get-rich scheme. If you make 10%, not 10x, which is 1,000%, but just 10%, you had an incredible year in the stock market on average, especially if you are new. Warren Buffett, even if you think he's too old, he is still one of the greatest investors ever, and even if I exclude this year, which has been terrible, he still only makes just over 20% per year on average. So the professional billionaire investors out there expect to make 20% on average at best, maybe a little more, maybe a little less, but they expect to make 20% on average. But you expect to make 200% to 1,000%? Really? And I know, I see the comments coming right now.
But I just 3x my money with Tesla, and I also hit with Hertz and made 3x in a day. So you are just one of those old guys who doesn't understand the new trading world.
I've seen this show before in the tech bubble and in 2007 with real estate. Those types of comments signal that something is severely wrong with the market and why I think a correction of some sort is coming. I'll link the video where I discuss the specifics of that at the end so you don't even have to hunt for it. It'll just pop up on the screen right there. Pop up. When the money is the easiest and the newbies are the experts, the market is on its last legs. And guess who gets burned and left holding the bag? You probably guessed it, it's the commenter we just talked about. So how do you avoid this, in my opinion? Be aware that the gains you are seeing are abnormal and not sustainable. Enjoy them for sure. I'm not saying not to do that. Take some profits if that fits your strategy. But do not count on every stock pick being a home run and 2xing your money or more every year. The second crazy thing people are doing right now, playing with options and margin. Something absolutely terrible happened last week. Now, I'm not going to speculate about what he was doing and involved with specifically, and I'm not going to tolerate conspiracies or any other garbage hate that goes on down in the comments. I'll ban you immediately. But in the end, this is sad, but could happen to anyone playing around with these. This only happens when you play with options and trade on the margin. There are so many people playing with options and their margin accounts right now who think they have themselves covered, they know what they are doing, and this would not happen to them. Just because you have been successful in this ridiculous market and didn't get burned doesn't mean you won't in the future. Based on what I am asked, I read, and the positions people are taking right now, I'd say about 99% of them have a rudimentary understanding at best in what they are doing and have no clue as to what the downside risk really is. Now let me explain what I mean specifically before you get too angry. It means just because you can add 2 plus 2 and understand that level of math, it does not mean you're ready to solve a complex trigonometry equation. But that is what most people are doing right now with options and their margin account. They're playing with a complex trigonometry equation, but can only add 2 plus 2. And what do I mean by not having a clue about the downside risk? Just because you know it's risky doesn't mean you have accurately calculated the risk. And sadly, I see it all over the place now with a lot of people who have no clue how much they stand to lose. I have seen it more times than I can count, someone saying,
"If it goes bad, I just lose all my money and it goes to zero. YOLO."
You can lose way more than just the money you have put in. When playing with options and margin, your loss is not mitigated at zero like it would be just buying a stock and holding. Your loss is infinite in some cases, just like your gains are as well, which is why people are tempted to play with them. So how do you avoid this, in my opinion? If you are new, don't do it. Period. Stay away. You will eventually get burned, and worse than you thought was possible. If you have interest in them, you had better be doing some studying. And that doesn't mean watching a YouTube video or two, I mean studying. Paper trading, which you can do with Webull, link in the description for 2 free stocks, and putting in months and months worth of work before even risking it for real. The third crazy thing people are doing right now, buying bankrupt companies. Just look at all the craziness with Hertz. Talk about something that is ridiculous. The company is bankrupt. It failed completely, like failed epically. So investors typically do not invest in these companies, and for good reason. Shareholders typically get nothing. Money goes to the creditors, the lawyers, various obligations, then it trickles down to the bondholders, and then preferred shareholders, and there usually isn't anything left after that to give us, the common shareholders. But here we are with people bidding it up 500% in just a few days. Let me show you how dumb this is and how dumb they think the people who are bidding this stock up are. Hertz actually announced they're issuing more shares. This is beyond ridiculous. If you think Hertz was thinking anything other than,
"I cannot believe there are this many suckers out there who are willing to buy our stock. Let's just issue more shares and try to save the company that way,"
then you are pretty much clueless as to how a business is run and what executives think about the average investor. And there's also a reason why they're now being investigated by the SEC for trying to issue those shares. In the end, it's a failed business model, plain and simple. They were in trouble well before the illness. The illness just accelerated the decline. So how do you avoid this, in my opinion? By crushing the like button 21 times and subscribing. Oh yeah, you're right. And by staying completely away from bankrupt companies. The last crazy thing people are doing right now is people are doing no analysis and depending on chat rooms and comment sections for advice. Look, there are more new people investing than ever before. And I am all for new people getting into investing. It's great, I really love it. We were all new once upon a time and had many of the same questions and excitement about investing as these people have right now. But I can tell you based on conversations, comments, discussions at work or with friends that people are not doing their analysis at all before trading. If you're getting your information strictly from YouTube, which I appreciate by the way, thank you very much, it may be a good start, but it's not doing your analysis. What is even more disturbing is go log into any chat room out there or Discord group and see how many people are trading and looking at stocks based on what is being pushed in there. This is incredibly dangerous and reckless behavior to say the least. Let me know what your answer is to this question. If you bought any stock in the past 30 days, did you read the entire earnings report from the last quarter for that stock? And I mean all of it, not just the pretty packaged document with all the pretty pictures. I mean the rest of the not so fun documents too. Did you read their latest 10K? Do you even know what a 10K is? Do you know where to find it? And that's just the beginning of the analysis you should be doing before putting your hard-earned money into a stock. And another thing, confirmation bias is running wild right now. What is confirmation bias, you may ask? Here's a fancy definition from Investopedia. Confirmation bias can create problems for investors. When researching an investment, someone might inadvertently look for information that supports his or her beliefs about the investment and fail to see the information that presents different ideas. The result is a one-sided view of the situation. Confirmation bias can thus cause investors to make poor decisions, whether it's in their choice of investments or their buy and sell timing. So putting that stealthy style, which means just easy to understand and short because I went to public school, people are only looking at articles, videos, and advice with others who share the same views or opinions as them. And I know this is going on because I get blasted in the comments sometimes for just saying Elon doesn't walk on water. But if I put out a video that said he did, those same people would love me. It's clearly not true that Elon walks on water, and it's absolutely ridiculous. But there are people out there that are only looking for information that confirms their own viewpoint, not necessarily reality. So how do you avoid this, in my opinion? Put in the work. Do your analysis. All of it. There is no can't miss investment that cannot wait a week for you to do your research. Except Hertz. But, we covered that one already. Debating investments in the chat room and the comment sections is actually a lot of fun, but it is no substitute for actually doing your analysis. Don't buy a stock just because I like it. I'm buying it because it fits my plan, but it might not necessarily fit yours. If you're not doing that, then you won't know. So what is the biggest reason people are doing these things? This is easy. It's because they aren't subscribed and liking my videos. Okay, fine, that was cheap, sorry, but I haven't had a date in a while. I need the likes. The real reason for real this time is FOMO is rampant right now. People are making decisions based on emotion and not solid fundamentals. How many times have you been told if it's too good to be true, it probably is? FOMO causes you to just ignore that advice because you have that feeling that you are missing out on a fortune. And the moment you enter the chat rooms or comment sections or even at work, it feels like everyone there is making huge money and you aren't. And that of course makes your FOMO even worse. The reality is a good portion of that is fake or exaggerated. The rise of the chat room millionaire is exactly that. It's fake. Now yes, there are people making money, but there are just as many people losing their shirts. But they don't post about that. And the moment the chat room millionaire loses, he will be out if he was even actually trading at all for real in the first place. It's like being on Instagram, which follow me on Instagram by the way, since I really don't know what I'm doing, but trying to have fun with it. And seeing all the people living perfect lives, and the reality is much different. So understand that going into those areas like social media or chat rooms or whatever, or the comment section even, you're going to have to control your FOMO. So how do you control it? That's a whole nother video in and of itself. But let's start with this. Do your studying, put in the work and research, and be prepared. So the next thing you need to do is click this icon right here to subscribe if you forgot to do it the first 3 times I reminded you, and click this video right here to get the information on the stock market crash I see coming that I promised you guys earlier. Thanks.